Hey, what's up, fam? It's your boy Darren Brown with Darren Mac Builders coming back to you. I hope you watched the video before this one because it all ties in. All right, things that you need to know. If you're in the real estate game, you need to know certain things in the real estate game. All right, one of the things you need to know is about financing. You must know about that, especially if you're dealing with your clients on a daily basis. You guys, you need to know about interest rates. You need to know how to figure out what a mortgage payment is. You just need to know how to qualify a person. And I say you're not doing take an application and all like that, but there's certain things that you just need to know if you're gonna get in this game, so you can be able to prepare even down the road. Okay, so the previous video I gave on you, I just gave you certain examples as far as what $100,000 can get at different interest rates. All right, and I'm keeping this number here. Let's say interest rates at 3%. And you only can qualify, your mortgage payment cannot exceed. We're talking about principal interest. We're not talking about taxes and insurance now. We're just talking about your mortgage payment, your principal and interest that you're paying back to the bank. Okay. So let's say that cannot exceed 421. Okay. So you wake up the next morning or whatever, and you find out that, hey, interest rates have gone up to 4%. All right. What does that mean? Well, that means that your purchasing power, how much you can borrow, has reduced, because you remember you cannot exceed 421.60. So at 4%, that means you only can borrow 88,308. Let's say things get kind of out of hand, rates go up to 5%. What happens then? All right, you remember your mortgage payment can't exceed 421.60. So that means that you only can borrow at this point 78,536 at 5%. 5% is not a bad interest rate. Is still below double digits, still below 6 or whatever. But if you have a client out there that this is what they're dealing with, 421.60, well, they can't have a lot of movement in the interest rates. Okay, you need to know this. You need to know this. Okay, so let's put it in perspective. Okay, let's numbers that you guys can relate to. So at one point, I was able to, because all I did was just double that basically. I was able to borrow 200,000, go to the bank, get a loan for 200,000, depending on what I was buying, and my mortgage payment was going to be 843.20, let's say, right? All right. But now rates went up to 4%. Guess what? I can't get a mortgage for two because I don't qualify. Okay, I only can get a mortgage for 176.16 in order to keep my payment at 843. If rates go down to 5%, guess what? I needed that 200, but my mortgage payment to stay at 843.20, I only can borrow 157.72. Do you see how that works? Okay, so the lower the interest rate, the more you can purchase, the more you can get. But if that interest rate changes, your purchasing power decreases. Okay, it decreases. So that's why people are talking about, oh, I hope the interest rates don't go up. I hope it doesn't do this. I hope it do that. Because this right here, ladies and gentlemen, is why. Right now, you qualify for 200,000. You can get $200,000 because your mortgage payment is not going to see 843. That mortgage payment, if that interest rate goes up, and I'm talking about people who are on borderline. If you still can qualify for, 200,000 at 5%, then there's no big deal. Okay, I'm gonna probably give you that little scenario, what that would probably change to if you still can qualify for that as well. I may do that just right now for, so you guys can have it. So bear with me. So I'm just trying to get you guys to understand that you must know this information. This is very important for you to know for your clients. Right now, interest rates are low. You're probably in this 3% range at 421. If it goes up, your client may not qualify. All right. So let's see the difference. Let's say your client needs this 200,000. Let's say the market changed and the house is contract, whatever, but the interest rate, they didn't lock them in. They didn't do anything like that. And the rate went from 3 to 4, but they need the $200,000, right? So I suggest that all of you guys buy a calculator, okay? Financial calculator. So while I'm talking to you guys, I'm gonna figure out this right here quick. So I got 200,000 and it's at 5%, 30 years. And so my payment went from, if I still got to get it, oops, y'all heard that. Sorry, I'm not editing this. Give me a moment. You know, I'll give it to you. Let me see. Hold on. One second. What did I do? Oh, 200,000 because I need that. And I 5% and 30 years, let's say. Don't tell me, oh, I want to do 15. This is not that. So 1,073. So I still can get this 2,000. I still can do it. But at 5%, I'm going to be paying $1,073. Okay? You see that? I may qualify, but I'm going for 843 to 1,073 at a 5% interest rate. Now I may still qualify, but let's say I can't qualify because this is the max I can go. That 843 is the max. Hey, I can't buy the house now, right? Understand the basics when it comes on to figuring out what the mortgage payments are. Okay? You guys can tap into me. You can direct message me. I can talk to you guys about it. It's not a problem. I'll show you guys how to do it on a calculator. It's not very hard. Don't make it hard for you to do these simple equations for your clients and for yourself. And even when you're buying something, you need to know this, okay? So look at this real good. Take a snapshot of it. Do whatever. But remember, let's recap. 100,000 at 3%, you're paying $421.60. Interest rate go to 4%, you're paying $421.60 at 4%. At 5%, you borrowing $78,536. You still got the $421, but the difference is you're borrowing less, meaning that you can. That's when you start seeing that. That's when you start seeing the prices of the homes starts declining. Why? Because interest rates are going up. And then the prices of the houses are going down because there's more people that probably can't qualify for that 100,000 now, right? Can't get that 100,000. They can get that 78. So you got to bring the houses that come into a line. So you're going to see that once you start seeing interest rates go up. Get ready. Hold on, because prices of homes are going to drop. You heard it here. Make sure you tune into my YouTube channel. I got a lot of these videos going out there, guys. Peace.